Bitcoin's not really big enough for central banks to at least large central banks to really care about. Um, and so I think there's this window here where gold's interesting, but I do think that Bitcoin is going to be the better performer over most cycles, for at least for investors that can withstand that volatility and that are willing to do time to research it and understand exactly what they own.
Hello and welcome to Crypto Street. In this video, we are excited to bring you the valuable insights of Lyn Alden on the future of Bitcoin. But before we jump into our discussion, let's take a quick look at the recent happenings in the cryptocurrency market. Yesterday, the crypto market experienced a downturn as news broke about the SEC suing Binance and its CEO Changpeng CZ Zhao, causing concerns among investors. Now, without further ado, let's begin our enlightening discussion with Lyn Alden.
Bitcoin is now a kind of a superior alternative in a lot of ways. And so I'm more active and interested in the Bitcoin space. I do some venture capital work there. I kind of work with some startups and I provide a lot of research for that space. So I generally prefer that, but I still use gold as a diversifier. Bitcoin's not really big enough for central banks to at least large central banks to really care about. And so I think there's this window here where gold's interesting, but I do think that Bitcoin is going to be the better performer over most cycles, for at least for investors that can withstand that volatility and that are willing to do time to research it and understand exactly what they own. Coin, it's probably a decent way to finish it. I think it benefits. I think the network effect and the overall technology is still not understood, and I think it's still strengthening. I think as other things happen, as AI makes certain things cheaper, any sort of scarce asset is attractive, and something that should hold its value long term. And then, like I said, it's basically just I think in many ways it's the future of money, and so it's something that while you can never be 100% sure about, I think it's probably my number one investment.
Right, as analysts thought that Bitcoin was on the cusp of a price breakout, the crypto market took a turn for the worse with the SEC presenting charges against Binance. This development has raised concerns among some analysts who believe that the BTC price bottom has not yet been reached. On June 5th, Bitcoin hit a 60-day low at $25,744, causing traders to worry about the possibility of a further price dip. It's worth noting that Bitcoin was already struggling with the $26,600 resistance prior to the SEC news. Similar worries surround Ether, which experienced a downturn after trading above the $2,100 level following the Shapella upgrade, reaching a 7-day low of $1,794 on May 24th. The recent decline in Ether's price coincides with a decrease in gas fees after the meme coin frenzy in May. On June 5th, the United States Securities and Exchange Commission led by Chairman Gary Gensler filed 13 charges against Binance entities and its CEO Changpeng CZ Zhao, alleging a blatant disregard for U.S. securities laws and substantial enrichment. The lawsuit, filed in the District Court for the District of Columbia, identifies 12 specific cryptocurrencies as securities. In response to the lawsuit, Binance posted an official response on Twitter shortly after the SEC's complaint became public. This recent SEC action adds to a history of disputes and mistrust surrounding the use case of digital assets. Some believe that U.S. lawmakers are increasingly displeased with the crypto industry, following the FTX implosion. The current battle focuses on how centralized exchanges can utilize customer funds. Despite this, crypto prices continue to be closely correlated with the Dow and S&P 500, and major banks still anticipate a sharp recession in the U.S. at some point in 2023. However, major stock indices have reached yearly highs following the U.S. debt ceiling deal. The news regarding Binance is further widening the gap between equities Bitcoin according to U.S. bank analysis, which takes into account over 1,000 data points. Investor sentiment regarding the current state of the economy remains low.
I also think there's an intersection between AI and Bitcoin in the sense that people have been talking for a while about micropayments or machine-to-machine payments, or human-to-machine payments or machine-to-human payments. And we're actually seeing really early signs of that. So, the existing money system has all sorts of frictions. It has global payment frictions, for people that send payments globally regularly. You run into more frictions than just, domestically. You can't really do microtransactions because there's like a minimum threshold for how big payments have to be. Like, for example, like payment services will charge like a 30-cent minimum fee, which means sending anything under a couple dollars doesn't really make sense. You can't just pay 25 cents for an article to read online, for example. And with like say Bitcoin, Lightning Network, and other sort of scaling solutions, it opens up real-time micropayments. And because it's open source, it also means that AI can actually use it without anyone's permission, right? And AI doesn't have to go get a bank account. Instead, they can, there's already been cases where creators will give an AI agent a small Lightning balance that they can pay. If they have a task to do and they say, okay, I have to do step one, two, three, four, five, six, and they find out that step four is that they could use a certain API, or they need beefier processing that they can rent. They can actually spend that on completing that step of the task. Um, and then you can imagine maybe a couple of years in the future that gets done by accident. Maybe someone says, I need you to do these 10 steps, or I want this outcome. And at one point along the way, the AI realizes that money would be useful to it. And so it either asks and says, well, I'd like some money to go buy this, or it could go out and earn it. There's ways that you can. It's open source. You can spin up a wallet. You could post content on Nostr and get tips, and people don't even know you're an AI. I mean, it's kind of far-fetched, but not really. And so, open source money is inherently um, just more ready to use for various agents that we automate, including automated, funding. And so I think you could have an environment where there's human to machine payments, there's machine to machine payments, there's machine to human payments. It's just kind of a more part of our automated life, which includes the transfers of monetary value, which is not always between humans. And it doesn't mean, of course, that AI has to be like sapient. I'm not talking about like super sci-fi stuff. I just mean agents that are programmed to do something fairly sophisticated, and that using products or services in a digital way is an important part of their process, and they have basically a budget.
Bitcoin has been trading within a descending channel pattern, with a recent attempt by the bulls to push the price above the 20-day EMA, $27,083, on June 4th. However, the bears quickly sold the rally, resulting in a downturn on June 5th. The price broke below the immediate support at $26,500 and continued to decline, reaching the crucial support zone between $25,800 and $25,250. It is crucial for buyers to defend this zone, as a break below it could trigger long liquidation and potentially lead the pair to descend toward $20,000. A break and close above the descending channel would indicate strength and mark the end of the corrective phase, potentially propelling the pair toward $31,000. Ether broke above the falling wedge pattern on May 28th and successfully retested it on June 1st. However, the bulls failed to initiate a new upward move, allowing the bears to regain control. On June 5th, sellers pushed the price below the moving averages, accelerating the selling pressure. The Ethereum pair also dropped below the resistance line of the wedge pattern. If this level fails to hold, the next support levels to watch are $1,740 and the support line. This negative view would be invalidated if the price turns up and breaks above $1,928. In such a scenario, the pair could surge toward $2,000 and potentially reach $2,200, where strong resistance from bears may be encountered.
The debt ceiling has been something I've been following ever since they technically ran into the debt ceiling back in January, right? So we've actually been in this multi-month period of the Treasury doing extraordinary measures to, manage their cash. And so back then, my key theme was that liquidity is actually probably going to be pretty good for the next several months, because the Treasury was forced to basically push their cash into the market because they had to spend down their cash balance in order to keep paying their bills, because they couldn't finance it with new debt, and they didn't, and their taxes don't cover it. And so for the for pretty much the first half of this year, the debt ceiling has ironically probably been constructive for markets, because the Federal Reserve has been tightening this whole time, and the Treasury's basically been forced to offset that. So you've had a neutral liquidity environment. So I was like, a lot of things are probably going to go sideways. Some things could go up, and so I wasn't too concerned with markets in general. So it was a somewhat bullish thing. But the point that I've been kind of concerned about for a while is that when the debt ceiling is actually resolved, ironically, the liquidity environment could change. And of course, this is based on what a handful of policymakers decide to do, but it's something we have to navigate. And so for your first question, I don't really know the odds that this particular agreement will go through. There are political strategists that are watching this hour by hour to see whether or not they have the votes. So I leave that to the political theorists. I kind of assume it's going to go through, but if we start to see signs otherwise, we'll see what happens. What I'm kind of focused on is what happens after the debt ceiling, because if they do successfully raise it, the treasury's already depleted their cash balance. They're nearly at zero. They don't really have any spare cash anymore, and so they have to go back to the debt market like they normally used to and issue more bonds in order to keep paying their bills. And they also want to refill their cash balance back up to their $500 billion target, which basically means pulling liquidity out of the market, kind of like what the Fed's doing. And so the challenge there is if they do that too quickly, or they do it with a lot of longer duration bonds, they risk pulling that liquidity out of the banking sector, and they risk causing another round of bank liquidity problems, failures, messy treasury auctions, messy treasury market, illiquid treasury market in general. I think that's kind of the key risk, and also just negative liquidity environments are bad for most risk assets most of the time, or at least it's one of the big variables that affects kind of the multi-month performance of major asset classes. So part of the reason why the first half of 2022 was so bad for most asset prices was that liquidity was constantly going down because you had the Fed was no longer adding liquidity to the market, and back then the Treasury was refilling its cash account from roughly zero after the prior debt ceiling issue. And so that was a particularly bad combination for liquidity. And we could repeat that again, but it's going to come down to what a handful of policymakers decide to do. How quickly do they want to refill that? What duration do they want to fill that? Are they going to be able to pull it out of reverse repos, which would be somewhat liquidity neutral? Or are they going to end up kind of messing it up and pulling it out of banks and causing a round of problems?
Thank you for watching. We appreciate your support and engagement. Your insights on the future direction of the world of cryptocurrencies are highly valued. Please share your thoughts in the comments below. Don't forget to like this video and subscribe to our channel for more engaging content.